Hey everybody, welcome to my channel. My name is Justin. Thank you so much for joining me today. Today I want to talk about Huntington Ingalls Industries, ticker symbol HII. Phil Towns bought this company in the fourth quarter 2020. In fact, he bought 44,000 shares worth about $8 million in the fourth quarter. And if you guys have been following my channel any period of time, you know this is one of my favorite stocks in the stock market. In fact, it's one of my largest positions in my own portfolio. I started buying this back in October of last year. It's my third largest position in my portfolio, as you can see up on the screen. So in this video, I just want to talk about, why I personally bought into Huntington Ingalls and why I'm so bullish on this company. And then I'm going to talk about probably why Phil Towns liked this company, so much as well. And so I'll talk about the company overview. I'll talk about management. I'll talk about financials, talk about what happened in the last quarter in 2020. And some big news actually came out here in the last couple weeks on Huntington. So I'm excited about this, guys. So stick around. Hey, welcome back everybody. The goal of this channel is to help you achieve financial freedom by investing in your future and investing in yourself. This channel is all about the stock market, individual stocks I'm buying, I'm selling, or doing deep dive analysis on, and then I'll sprinkle in personal finance here and there. So if you get value out of this, please smash the thumbs up button. It pushes this video out to more people, really helps out the channel a lot. I personally appreciate it. If you enjoy this video and you want to see more, I encourage you to subscribe to the channel. All right, so Phil Towns, he bought Huntington Ingalls in the fourth quarter. So what does Huntington Ingalls do? Well, they're actually a manufacturer of ships for the U.S. Navy. And so they're the only company that actually builds actual aircraft carriers for the U.S. Navy, and they're only one of two companies that build submarines for the U.S. Navy. This is a company that has a $46 billion backlog as of the last quarters, and it goes all the way out to 2032. So they have contracts in place with the government that go out the next 11 years, which is just phenomenal. Not only that, but just here in February, they got another contract with the government for $2.9 billion. All right, so let's talk about management right now, and the CEO is Mike Petters. And I've said this numerous times in other videos, he is my favorite CEO that I've done research on, period. This is a gentleman that's been with the company since they spun off Northrop Grumman since 2011. So Huntington Ingalls is actually part of Northrop Grumman for decades. I mean, they have over 100-year history. They have two different shipbuilders. So they have Ingalls and Newport that actually go back to actually before even the 1900s, if you can actually believe it. But Mike Petters, he was with Northrop Grumman since like the 1980s. And then once they spun off Northrop in 2011, he's just been the CEO ever since. And he's just phenomenal. I mean, he's very employee-oriented and he's very shareholder-oriented. So historically, Huntington Ingalls has put 97% of their free cash flow towards the shareholders through like buybacks, dividends. I mean, they've increased their dividends each year for the last 3 years by 20%. In fact, they're paying out $1.14 per share in March coming up. So why did Phil Towns buy into this company? What attracted to him to this particular stock, right? And if you follow Phil Towns like I do, he always talks about an event. You want to try to find a company that is a very established company, that's a really well-run company, and then they went through some kind of event, and now their share price really doesn't represent their actual real valuation of the company itself. And that's what's happening with Huntington Ingalls. So they went through the whole Rona event like many other companies did last year. So in the second quarter, unfortunately, the company ran into some attendance issues. So they only had 65% attendance during the second quarter of 2020. So we only have 6 out of 10 people showing up for work for over a quarter period of time. Your shipbuilding obviously gets delayed, and there's issues that happened with that. In fact, the company's gone out and hired another 3,000 employees here in the last couple of months because they did get behind on their shipbuilding. In fact, they're actually the largest industrial company in Massachusetts. They have over 42,000 employees that work for the company. So this is a very, very big company, and they're about a $9 billion market cap overall. But the share price of this company, was at $280 a share, and then it dropped all the way down to $140 a share. So it tanked 50% in a very short amount of time. And I looked at this, I'm sure Phil Towns looked at this and said, you know what, this company is still intact. It's fine. I know they're delayed, but they're going to be totally fine. Their profit margins for the second quarter 2020 went from 8% historically, around 7.5 to 8%, down to 2.8%. And obviously, when that happened, their profits dropped considerably, their earnings per share dropped, and the hedge fund managers just started billing out. However, they're right back on track. In fact, this past quarter, they had 11% profit margin, which is that's operating profits for the company, and that's just phenomenal. So they're right back on track. Like I said, they hired a bunch of people. Now, what's really scared hedge fund managers is that because of the delays in ship building, you have to remember this takes years for ships to be built. It takes a very, very long time for them to get issued, seaworthy. I mean, there's a lot of different things that they have to go through, and so there's only one ship that is expected to be delivered in 2021, but there's 3 ships that will be delivered in 2022. So hedge fund managers right now just don't really want to be in Huntington Ingalls. Plus, the company stopped all share buybacks last year, but they announced in their fourth quarter presentation that they're starting the share buybacks right back up in quarter 1 2021. And since then, we've actually seen almost a 15% uptick on the stock. All right, so let's just quickly look at some financials of this company. And this was very attractive to me too. So at the end of the fourth quarter 2020, they had about $500 million worth of cash on their books, which is pretty good. And then they do have a $1.6 billion of long-term debt. However, with their free cash flow that they have, they could pay that off in about 2 years. So, typically when I'm looking at a stock, I'm trying to look around 2 to 3 years or less, being able to pay off with their free cash flow, and it does qualify for that. And so the company is really sitting in a really good position cash-wise, and they wouldn't start, share buybacks unless they were feeling okay where things are at. And keep in mind, this company is really, really undervalued right now. We'll get to the valuation towards the end of this video. But I expect them to buy quite a bit of shares in the first quarter, especially if it keeps staying around the price as it is right now. So let's take a look at the income statement. They had about $9 billion of revenue for 2020. They had about $700 million of net income. So those are really, really solid numbers overall, especially when you put into effect that their whole Rona situation happened. They had a really terrible second quarter. They had a decent third quarter, not great. Now, they did beat expectations pretty good in the third quarter and the fourth quarter. So that's all good. Now, as far as free cash flow goes, this company had $700 million of free cash flow for 2020. So again, they're really, really good shape overall. And when I'm really looking at a company, especially a CEO like Mike Petters, for example, and CEOs come out with these big audacious goals, I really like that, especially if they've shown that they've been able to beat those in the past. And like I said, Mike Petters is my favorite CEO in the market, and he has come out and said that they're going to have $3 billion of free cash flow from 2020 to 2024. And I believe him. Not only that, but he has come out and said, historically they've had operating profit margins of around 8%. He's looking to get that up to 9 to 10% in the future. And I believe him when he says that. So that's only going to increase the share price in the future when that happens. All right, so what is the valuation of this company? What do I value it? What do I think the intrinsic value of this company is? So right now they're trading at about $183 a share. Like I said, they went from $280 a share in February last year down to $140 a share just a month or two after that. So my actually cost basis on this company is $157 a share. I think anything under $175 is a really, really good buy for this company. I personally think this company is going to get up to over $300 per share in the future. It's going to probably take 18 months to 24 months just because of the delays that they had in their shipyards, but they're moving that right direction. And again, this is just one of those sustainable companies, in my personal opinion, that's going to do well. And if this stock drops like below 150, oh my goodness, I will make this, if it's not gonna be my number one position, it'll be right there. So I'd probably pile another $10,000 at least into this company. But even where it's at, I really think it's going to do well. And I've listened to Phil Towns like podcasts and this different YouTube videos and all that kind of stuff. And he has touched on Huntington Ingalls before, and he has said that with the defense sector, he believes that this market is really frothy right now. It's really overvalued, and there's going to be some kind of pullback. And we've seen some stuff in the last week. I feel like this is more of like a market correction than a huge pullback overall, but we'll see what kind of happens. But he said, defensive sector is probably on the more the safe side. We're not going to see as big of a dip if we see a big pullback in the market overall. In fact, I'm invested in Huntington Ingalls, I'm invested in Boeing, and I'm invested in Lockheed Martin. And I've invested actually in all those companies here in the last month. I've added to my Huntington and Boeing position, and then Lockheed Martin is one of my new positions. I think the defensive sector overall is just undervalued at the moment. And I think there's a lot of fear in the market around the Biden administration. Them coming in, I think people are thinking they're going to pull money from the defensive sector. I don't think that's really going to happen. I think, Biden his number one priority right now is looking at this whole vaccine rollout and, trying to get the economy back on. And now we're hearing that bond yields are going up. And so, he's got all kinds of stuff on his plate. I think taking money from the defensive sector is the last thing that he wants to do. Plus, Huntington Ingalls is in a really good place right now with having that $46 billion backlog plus that other $3 billion they just got on top of that. So I love Huntington Ingalls. I think this is going to be, at least double my money going out into the future. Love this company. Again, under 175. Awesome buy. So those are my thoughts, guys. I'd love to hear from you guys in the comment section. What do you think about Huntington Ingalls? What do you think about Phil Towns buying it during the fourth quarter? If you guys got some value out of this video, please hit that thumbs up button. It helps out the channel a lot, pushes out to more people, and consider subscribing if you like this video and see more of these in the future. So guys, thank you so much for staying all the way to the end. You guys get the gold star. All right, I'll catch you guys on the other side. God bless. Take care.